Hi, my name is Darren Chislett, and I'm a Wealth Management Advisor with the Newfoundland and Labrador Credit Union. In this segment of our presentation, we're going to be talking about managing your financial affairs, which is really just one aspect of financial planning. Some of the key points we're going to discuss throughout this presentation is taking a look at where you are now, what areas you should be focusing on if you're in a situation where you want to begin to manage your financial affairs in a better way, what changes do you need to make, and what will your financial retirement look like when you get to that magical day when you're ready to retire. So when we look at financial planning, there's a number of different elements, as you can see in this chart. We're going to touch on a couple of these in this segment, and some of the other ones are touched in some of the other segments that'll follow. In the chart, you'll see the taxes in the middle. The reason we do that is because whenever we're looking at financial planning, whenever we're looking at any aspect of financial planning, it's important to always consider tax. Because from a taxation point of view, if we can get you in a position where you reduce your taxation, then there's more money in your pocket, which is obviously what we're looking for. So if I ask you, and if you asked yourself, who manages your money? Most of us would say it's us, maybe a spouse. We'd all like to be in a position where we're managing our own money, but if we look at our individual situations, you may be in a position where you have a mortgage and the mortgage holder is taking a portion of your money every month. Maybe you've got credit cards that you're making payments on a monthly basis, a vehicle loan that a payment comes out, the federal government is taking a portion in taxes, and the provincial government is taking a portion in taxes. So you can see how, yes, you want to be in a position where you're managing your own money, but if you look at all the people that have their hands in the pot, maybe there's other people managing your money. So our goal throughout the presentation is to hopefully get you in a situation where you're managing more of your own money. And if you can start to rearrange your financial affairs in a certain way, maybe you'll be in that position. So let's take a look at some focused financial planning. First of all, when we talk about retirement, I'm going to give you a number of different elements of planning that we would look at as financial planners if you were to come in and sit down with us to discuss your situation. There's probably 15 different aspects of financial planning that we would look at depending on your situation. Not that we would say that we would look at all 15 or 20 of them with everybody, because some would apply in your situation and some may apply later on in your life, and they may not apply at all. So our job is to sit down with you and determine which ones apply in your case, which ones we can make the changes to get you in a better financial place. To make this a little more clear, I'm going to give you, I guess, 3 hypothetical situations of members who we would look and meet with on a pretty regular basis, and some of the areas that we would focus on in these hypothetical situations. So if we look at Mr. and Mrs. Whistle, Jim and Joan, both are 25 years old, have an income combined of around $60,000, and have 2 children, 2 and 3 years old. So your typical family starting out. Their financial snapshot shows them with a house that they've recently bought and a mortgage, a relatively high mortgage in relation to the value of their house, a vehicle with a car loan, some small savings that they've just started in the way of RRSPs and RESPs, and some credit card debt. So not an uncommon financial snapshot of a couple that's just starting out and building their family and building their financial future. In this case, we would be looking at different things than maybe another scenario. For example, in this case, we would want to look at debt management and how we can manage the debt that Mr. and Mrs. Whistle have, and how we can get it paid off quicker so that they're debt-free at some point down the road, but also it's not in a situation where it's too stringent now that they can't afford to live. Also, their children's education, a 2 and a 3-year-old, it's going to be quite costly when in 15 or 16 or 17 years when they get to the point where they are going to be going to school. Take a look at some cash flow issues, maybe restructuring accounts, and the big one here is also we would want to do a full insurance review in a situation like this. If the worst were to happen and one of the parents were to become disabled or pass away, From a financial point of view, it would be very onerous on the other spouse to try to continue with the standard of living that they've developed. So how would we help at NLCU? We would look to identify their priority items, look for some retirement strategies that they're able to afford at this point. It's great to put the retirement strategies in place, but it's another thing to put them in place to a point where they can actually act on them. Look at some debt management, cash flow, and always allow for flexible decisions to adjust to the lifestyle changes that'll come for them down the road. Second couple is Mr. and Mrs. Canuck, Matt and Maud, age 40 and 43. Matt is a business owner with an income of $55,000. It's a second marriage for him and has a special needs child at age 12. Maud is 43. She has an income of $45,000. So combined, they're making $100,000. And Maud has her mother living with them at their home, and she's 82 years old. So this situation is much different than the first example of Mr. and Mrs. Whistle. They're in a different stage in their life. We look at their financial snapshot. They have a number of assets, a home, vehicle, a cottage, and very little debt. They've started to prepare for their retirement with RRSPs, some tax-free savings accounts, and a small registered disability savings plan that they're just starting to pay into. So we can see here that what we would look at from a financial planning point of view is very different with this couple than the first couple that we used. In this case, we would look at things like retirement savings, tax-free savings, because they're in a situation now where they're cash flow positive and can be looking to save substantial money over the next number of years. They've got aging parents and the issues that come with an aging mom that's living in the house. They also have estate planning needs and may want an insurance review, especially with a disabled son. How would we help at NLCU? We would again look to prioritize the items that are important to them. Take a look at their cash flow. Succession planning in this case is important. Insurance considerations, a registered disability savings plan, and estate planning. So very different items for this couple than the first, but equally important, just in a different way. And the last chap is Mr. Handel. He's single, 55 years old, rents, no house, getting a decent pension for the amount of debt he has, which is very little, only a $5,000 visa. In this case, he also likes to travel twice a year, he's told us. So that's very important to him. So what you would need to look at things very differently for him as well. Tax efficiency might be important, given that he's getting a pension which is taxed at a relatively high marginal tax rate. His retirement lifestyle is super important. He's retired. Traveling is very important, so he's going to want to be able to continue to do that, so we have to structure that into any planning we do. Estate planning maybe, where's the money or whatever he has left when he passes on, where's that going to go, and maybe take a quick look at insurance review. These lists aren't, there's obviously more that we could add as we go through the planning process, but this is what would jump out in this case if we were meeting with Mr. Handel and his financial situation. So what would we do? Again, taking a look at the cash flow, insurance maybe, and managing just his overall financial lifestyle. So hopefully that gave you an understanding of 3 different scenarios. Maybe you fall into one of those scenarios, maybe you don't, but it just shows that depending on where you are in your lifestyle will depend a lot on how we as financial planners would sit across the desk from you and try to determine where you are now, where you want to be, and how best to get you there. Post-retirement, so now you're at that magical age where you've hit that retirement. You've worked hard to get there. Now there's changes that have to happen. You're no longer in a situation where you're making money and have the potential to continue to make money. You're now in a situation where you're either living on a pension or you're living on the money that you saved, and now you have to move into managing your money. And it's very important to manage your money in the correct way, because if you deplete it too quickly, maybe you won't be able to meet the retirement lifestyle you're looking for. You need to change your spending habits in retirement and curb impulsive spending. That's very important. Curbing those impulsive buys if they weren't planned for, because an impulsive spending purchase that wasn't planned for in retirement could deplete your retirement savings or deplete your monthly income if you have to make payments on it, and then affect some of the planning that you may have done. Put some emergency funds in place. The big one here, I think, if I were looking, is inflation and returns. I think it's really important when you're planning and you hit that retirement age that you've planned for inflation. The cost of something at retirement, if you're 55 years old or 60 years old, is going to be very different than when you're 80 years old. And I just used a quick example there. Just go back and think how much a loaf of bread was 20 years ago and project that out 20 years from now. So if you haven't included that in your retirement income projections, it's going to be very difficult as you move forward and things get more expensive. Develop and working within a budget is also important. That doesn't mean marking down and keeping track of everything you purchase on a daily basis to make sure you don't go over. It means making sure that you're not spending on a monthly basis more than you're bringing in. Various ways that we can do that to help you. It can be as complicated as you want, or again, it can be as simple as you want it to be as well. So what do we recommend? Here at NLCU, we are in a position where we will bring in professionals to help you where needed. As financial planners, if we determine that you need the help of outside resources like accountants or lawyers or specialists that we don't have the ability to deal with it inside our doors, we're happy to coordinate the use of these resources with you, work with you to get your financial plan put in place. Here we're talking about things like wills, powers of attorney, and some estate planning things primarily, but it could be some high-end tax accounting stuff as well that we need to bring in some experts. So where do we go next? We recommend you come in and meet with one of us and have that financial discussion. Take a look at your current situation, plan for flexibility to adjust to your life changes, and ask for help to prioritize and simplify. The big one here is if you are in a position where you want to put a plan in place, where you want to start working towards some financial freedom in the future, the advice that we give and the plan that we work together with you to put together, it's pointless if that's taken home and put on the kitchen cupboard and not looked at. So hopefully you're in a situation that when we come up with a plan, you're comfortable with it, and we feel that it'll work well together and get you to where you want to be, that you act on it and implement it. And at the same time, we definitely recommend that you review the plan at least once a year, because nothing is static in life and things change and we need to adjust for those changes. So hopefully that gives you a little bit of an understanding about your future ahead, and thanks for listening.